Good morning, everybody, and welcome to today's edition of Toggle's Daily Video Insights. Today, we're going to take a look at a company called Advanced Energy Industries. You may or may not have heard of the company, but it actually is one of those companies that are key in production of semiconductors, a variety of medical and industrial screens, and so on. What Toggle is actually highlighting today is that the company, given its recent rally, may be near-term overbought, and so there could be a correction in the offing. Now, let's take a look exactly what the pattern is all about. So what Toggle is suggesting here is that the drop that the stock could see over the next 2 weeks is about 3.5%, and the pattern would be invalidated if the stock breaks through 73.20 on the upside and would be completed at around 79 down here. That's what these green and red lines are meant to tell you, and here is the confidence interval, as you already know. The key thing to highlight is that this is actually quite a high quality pattern. It received 8 out of 8 stars, and one of the main reasons it has done so is that the analysis extended across 11 distinct occasions. So there was actually quite a lot of data for Toggle to be able to look back and then study what typically happens when you have these kinds of overbought conditions. Now, maybe one quick comment about how we actually measure. What does it mean overbought? In this case, this is not positioning data. What Toggle actually does is it studies the size, the percent move of the asset, in this case, the AEIS stock price, and adjusted by its recent volatility. And so if the move was disproportionate given what its recent volatility suggests it should be, that is what creates the overbought condition. And very quickly, you can also see below the table of what the relationships are between this overbought condition and other horizons, and you see that it's basically quite low. And really, this is meant to imply just a near-term correction. Furthermore, the last chart to look at right down here is the historical one, and you can see that these overbought conditions actually go all the way back 20 years, even in the early 2000s. So much for the asset in the spotlight today. One other thing we discussed in the daily brief today also is the fact that there is a very, very encouraging development going on with the U.S. consumer, which is the pay down of the credit card debt and the resulting increase in FICO scores. So U.S. consumer actually has taken advantage of this current crisis and the government handouts to really improve its fiscal position, which is something that we cannot say about the federal government, whose position seems to be going from bad to worse. Anyway, so much for today. Thank you very much for your attention, and we will talk again tomorrow.